Hello traders, Gary Wagner here just after 1:30 in Honolulu, 6:30 in New York on Friday. Happy Aloha Friday as we say on the islands. It is the second day of February 2024 and this is the weekend review for gold and silver. I'm going to shift gears or change focus to what I typically do on a weekend review, which is to look at the week that just transpired. On today's report, I want to look at the big picture and add to my outlook 2024, 25, and 26 based upon additional work done since I released that video. But first, I do want to cover what I think might happen next week, and it is based upon this daily chart with a compression triangle showing a number of waves hitting the lower end of support, the upper level of resistance. R.N. Elliott defined multiple variations of a Elliott wave triangle, and in the book written by Robert Prechter, R.N. Elliott's masterwork, he defines 6 variations, 3 bullish and 3 bearish. I have just put up an example from the Elliott wave forecast of a 5-count compression triangle in a bull count. As you can see, you get a move up and then down to the first line, which is labeled A, B, C, D, and E. In other words, 5 waves. At the conclusion of the 5th wave, you get a move that will break above the upper level resistance. That is called a thrust. That ends the sideways compression and typically will take a market to new highs. And that is what I believe will happen, which brings us to the main focus of today's show, and that is the projection and price target that I believed we could hit by the end of 2024. Simply put, what I was doing to reach that projection is taking this rally up to the conclusion and then beginning after the correction here, doing a 1-to-1 extension. When I did that, the results were that gold should hit approximately $2,200 to $2,250. On today's show, I want to frame this 1 fib extension I did to reach my conclusion within the totality of the current Elliott wave count. These are primary waves. On today's show, I want to frame this 1 fib extension I did to reach my conclusion within the totality of the current Elliott wave count. In other words, the studies I'm going to present begin at 2016 at this low, and it is following a multi-year correction from the highs in the middle of 2011 down to these lows, and our study will begin here. We are labeling this particular price point the end of a primary 4th wave, and currently we are in a primary 5th wave. When we put all of this information into perspective, again, this is the conclusion of the multi-year 4th wave correction. This entire move from present day back to 2016 is part and parcel of a primary 5th wave, and that 5th wave is still incomplete. We have completed our subcount wave 1 and wave 2. Gold has entered its 3rd intermediate wave of 5 waves. Wave 1, wave 2. We have begun the 3rd wave, which will be completed with a 4th of 5 and a 5th of 5. Once we complete the 5th of 5, we will end the motive phase and go into a corrective period. A more detailed discussion of this study will begin next week when we can begin to analyze this study with the detail that it deserves. This has been Gary Wagner wishing you, as always, good trading. We will talk to you next week for the next set of evening reports. Have a great weekend. Bye-bye.